are talking about next-gen payments, UPI 3.0 and DPay. So I have with me an eminent set of speakers, and besides me, I have Abhishek Umar Singh, who is ADG of UIDI. So I will first of all start with him itself and ask about what is interesting about UPI 3.0 and why should the BFSI and the fintech community be excited about it. We can start that. Yeah.
Okay, I'll come in from the Aadhaar perspective because that's what I represent here. So, as far as I understand, UPI 3.0 is making the payment ecosystem that has been created, this entire foundational layer, which accounts for over 45% of real-time digital transactions in the world, which in itself is a huge, huge feat. So how do you make it more secure? How do you make it more resilient? And when you talk of security, automatically, correct identification and correct authentication of the person who is initiating the transaction or doing the transaction automatically comes into play. And that's what this entire backbone called Aadhaar, which has been created by UIDI, comes into play. So, our contribution or our role would be to enable that additional factor of authentication that needs to be built into, say, higher value transactions. So, face authentication is a very easy to adopt modality. And we are working extremely, extremely fast to make changes in the algorithm that we right now have. As we speak, we have rolled out a new version of the face authentication application. And this one has been tested out far more rigorously than the earlier one. And really happy to share that the internal tests point out to it being fairly robust, extremely robust on the deepfake AI attack detection. So it's a resilient, fantastic product which can simply be integrated as an additional layer of authentication. So Aadhaar offers you that non-repudiable way of identifying a person. We recommend strongly that let it be done for higher value transaction through a biometrics. If it's being done from a smartphone, then face automatically becomes the modality of choice. OTP also can be incorporated, but OTP is a fairly used one and also sometimes amenable to misuse. So that's what we bring on table, and then we are happy to onboard our BFSI fintech partners onto our ecosystem. And last year, certain innovation was done by the central government. I'll also, in the next 30 seconds, kind of share that. So there are two ways one can use the Aadhaar authentication framework in the ecosystem. One is if you're a regulated entity. It's easy, very simple. If you're not, then of course there's a process. You can become one. The regulator has to approve, then it sends to UIDI. UIDI recommends to Department of Revenue, and then a notification is issued. That's one rule. The other is that if you have a use case which is in national interest, which is in the interest of the state, and it involves ease of living, ease of governance, then the second route is available, which is called the SWIC rules. And you have to apply to the concerned, say, either the state government or the central government ministry. It comes to the Ministry of Electronics and IT, who therefrom sends it to the UIDI. We evaluate the use case. We certify that, yes, it is in national interest. Then it goes back to the Ministry of Electronics and IT. All of this is an online process. It's fairly seamless and fairly fast. And upon a notification by the concerned ministry of the state or the center, the entity becomes eligible to use Aadhaar authentication. So, I would request, welcome aboard. Let's make the payment system far more secure than it is right now.
So asking you another add-on question, that India has been talking about exporting its DPI knowledge base and infrastructure ideas. So is DPI actually exportable, or it is dependent because of India's like major policy push on UPI and Aadhaar. So actually में क्या DPI export हो सकता है इंडिया का?
बिल्कुल हो सकता है DPI एक्सपोर्ट, बट इसको थोड़ा सा समझने की ज़रूरत है कि वाई it's been so extremely successful in India, and what other countries perhaps will need to do if they want to create a similar success story. So identity forms the base layer, and identity to have but that identity layer, one needs to have all those relevant biometrics, etc., captured. So identity in itself does not help, or so many countries we have seen what happens is that they are very enthusiastic about building the identity layer. They learn from the UIDI example, they learn from the UIDI success story. They go and implement, they onboard some SI, and then some registration happens, people's biometrics are captured. But then thereafter, nothing happens. Nothing happens because the use cases that need to be built on top of that, they are missing. So it's an ecosystem approach. So we had a payments layer coming on top of the identity layer. Then we have got different functional IDs that get attached and linked to the base ID, which is Aadhaar. So for instance, in education, you got one instance. In case you want to avail of healthcare facilities, then there's Ayushman. PDS, you got another one. So it's the ecosystem that comes together and then creates the magic. Then it makes everything seamless. So yes, it is exportable, and there are initiatives by the government of India. And in fact, Sri Lanka right now the RFP is on, and the government of India is assisting through NISG to help them create identity and other use cases on top of that. And apart from that, of course, we are also, and I think this is a gathering which needs to know this, we are also enabling, right now our entire infrastructure is geofenced. You cannot enter our authentication ecosystem beyond the boundaries. It's not possible. We are selectively opening it up in collaboration with the Reserve Bank and the Department of Financial Services. So we have just done, and State Bank of India, I think Chief General Manager was here. So we've done a POC for NRIs, customers in Bahrain. It's been extremely successful. And I think soon we might find us enabling this for other non-resident Indians also.
Fantastic. So I will move on to Mr. Lalit Chaudhary, who is representing MindGate Solution. So Lalit, I will ask you that since your organization is involved in like the powering the UPI and other real-time payment rails for the major Indian banks, what are the risks or technological challenges when we are over dependent on a technology backend? If you can elaborate on that.
So, if I understand you correctly, you're asking what are the risks associated with the backend of managing UPI as a solution?
Yes.
Is that the
yes?
Hi. So, yeah, before we go on to that point, just want to introduce MindGate. So, basically, we are the backend layer, the infrastructure layer, which actually powers the UPI transactions. So, while we quote the numbers around 23 billion, 2.3 billion transactions that are happening across, which are there, but more than 50% are processed on our platform. So from a scale perspective, we have unique challenges that we have encountered, and we have helped across the ecosystem process that. Just to quote, in a single day, we process somewhere close to around 45 crores transactions every day. So the unique challenges that we have from a risk perspective are multifold. While we connect typically to the infrastructure layer of NPCI, but we also kind of provide the layer to the acquiring stack as well as the PSP. So these layers themselves carry inherent risk in terms of challenges which come from attacks, which are basically handled at a WAF layer also. But then typically when it comes to the application layer, we have also cyber frauds and other things also from a PSP layer that we can kind of do. So we have something called as a EFRM, a layer which sits on top of it. While generic rules which are configured at an NPCI layer, these are velocity checks. But typically when a fraud gets triggered, so there are multiple alerts that get triggered. We kind of do a proactive alerting mechanism to the EFRM channels, and in real time we kind of stop those transactions also. So NPCI has introduced a robust ecosystem in terms of MCC-based checks and other things also from merchant ecosystem to preserve transactions. But yes, threats are real in terms of customers' money to be preserved in terms of transactions. But if you look at it from an overall system, we have multi-layer security in place. One happens to be the fraud and risk management layer, and then followed by our monitoring layer, which is real-time monitoring, where when these many transactions flow, it's very important to introduce sufficient rules. So that's where we have introduced many new things. In fact, AI is also helping us over here. We are introducing newer tools to leverage the power of AI so earlier our engagement journeys were more from a perspective of triggers. Now we have gone a step forward in terms of not only triggers, but effectively preventing and doing the end calling as well through our platform. So I think that layer has helped. And yes, we are working very closely with NPCI to ensure backend channel secured.
Fantastic. And our next speaker is Deepak Sharma ji, who is the independent director for Surudaya Small Finance Bank. So I will ask you about the UPI 3.0. And UPI 3.0 like talks about building the credit lines. So will it threaten credit cards?
I think very interesting question. So far, in fact, the bank that I am on the board of is probably the only bank that has started to scale up credit line on UPI. So I don't know if you were aware of this when you asked this question. This is in partnership with Paytm, and this is not for consumers, but for the merchants. Because I think banks have been very reluctant, if you ask me, to bring in new to credit customers at a lower ticket size, because your both underwriting capability and your ability to collect, that cost unfortunately has not come down. So thereby they are still more comfortable going on a RuPay way to move customers on a UPI, rather than just give a credit line which is non-carded model. But I think this is a beginning, I would say. There are areas, it's not that it's just going to eat into the credit card business, for the very simple reason that even credit card as a business needs to grow in India. I think the number of unique card customers, that's not growing fast enough. The total number of cards are, but not the unique number of customers. So since I also sit on the board of Experian, which is a credit bureau, and I'm looking at what kind of underwriting data is coming, which gives banks comfort to thereby write more customers for credit. I think there are models getting tested for thin file customers. So you may not still have a full bureau footprint, but if that data is good enough to bring them on board either on a low value, because I know many fintechs are trying a secured card route. That is not something which is scalable yet. But yes, I think if we pick small merchants in this country where you have a GST footprint, thereby you can underwrite those merchants better and onboard them for credit line on UPI, so that you also get to see the view of transactions. What are they paying for? And that also in some way helps on the working capital cycle for these merchants. So I think credit line on UPI will solve a problem of access to credit for a very different customer segment than what credit cards are doing. And I think in a market like ours, multiple credit instruments can continue to grow. And I don't see there's probably any conflict or overlap between the two instruments.
Fantastic. Let me request our next speaker, Harshvardhan Masta, who is head of payments for Policy Bazaar. So, how do you see that UPI 3.0 uh, uh, can help your company, and how in uh, payments being smooth and increasingly easier for your customers? Yeah.
First of all, thank you for having me here. I didn't think of what it is like what happened with internet. It started with email, right? Then e-commerce, then social media, and then subscription, right? This is what will happen. All of these layers, all of this infrastructure built below it, right? The same will the same trajectory is happening with UPI 3.0, right? I think credit on UPI is the biggest unlock what India can do, right? Think of it. Imagine if a Kirana store can get a credit line instantly for his business, or a student gets education credit instantly, and all of this happens through same rail. We are paying to the merchant or anybody who is wanting the credit line, and the repayment is also happening through the same line. I think this is the uh, biggest use case for the fintechs and for the financial institutes. Now, let me tell you about our own company for, let's say, for Policy Bazaar. If you are a customer in a tier 3, tier 4 cities, and you want to have a health insurance or a term insurance, which is very difficult and which is very difficult to afford for a customer who is in tier 3 city, and he have to opt a health insurance of 40,000. How can he take that insurance? Now, simply you can have a buy now, pay later service, but at the back end, you need a payment instrument by which customer can pay on a monthly mode, where you see lot of UPI auto pay is getting traction, right? So a customer sitting in Bareilly can opt for a health insurance for, imagine, for 2,000 rupees. He doesn't have a credit card. In India, we have a population of 1.5 billion users, but less than 80 million users have credit access. So where is the, I will say, where is the opportunity? I think credit UPI is the opportunity. And if we can give credit line on UPI, I think this can be a game changer for everybody. I think this is
Fantastic, fantastic. Let me request our next speaker, Mr. Ramanan SV, who is the CEO of India and South Asia for Intellect Design Arena. Your views on UPI 3.0, and where are the challenges and opportunities?
Good afternoon, everyone, and thanks for the opportunity. Uh, while this topic of UPI 3.0 and UPI and what I heard from our senior colleagues from UADI on how Jam Trinity has helped, one thing that comes to my mind is how technology sometimes is ahead of the race, right? I mean, let me give an analogy and come back to UPI. I'm not too sure how many of us know that the luggage that we buy every day and use every day, the wheels for the luggage came about only in 1970. Wheels were there, carrying luggage was there, but connecting the two dots of wheels to the luggage happened in 1970. Similarly, the technology of peer-to-peer payment has been there for more than 2 decades. Okay. Then we created the wallets where both the receiving party and the sending party had to be on the same environment. And then the connection happened that you can actually make a payment and from your bank account to another bank account. And that's how UPI picked up. Okay. Now the next transition point is happening, okay, which is your UPI 3.0. I just heard our policy our speakers speak about health insurance and term insurance. Don't have to go that far. I'm sure all of us in the room maybe have a Netflix connection, and I play my Netflix subscription through Google Pay. Okay. Previously, when you had to go for these kind of subscription, you will have a lot of paperwork to do, put a signatures, processing bank, validating bank, all those processes have been eliminated thanks to UPI 3.0. Okay. If we can start thinking about how do you connect these dots, where are the opportunities coming? How can technology be enabled? If I were to, I come from intellect design arena, and we proud ourselves that our DNA is design thinking. And in design thinking, we say that there is a desirability, there is a feasibility, and there is a viability. Desirability is something that I want. Instant payment was a desirability. Feasibility is a technology that supports it. And the last point is viability. Is the technology and this whole ecosystem, is it viable in the long run? We have seen the viability of UPI, though it is still free of cost. The players are making their revenue models through other channels. But when you look at the other initiatives that we see from the same tech stacks, currently, I'm just taking a pause to say that if I were to look at technologies like blockchain that came ahead of it, they have not been able to crack that piece between desirability, feasibility, and viability. That is why we are not seeing enough use cases of that. So with UPI 3.0, it is up to our imagination as to what all it can be done. Credit lines is just one imagination. What else can we do? Cross-border payments is another imagination. Sir spoke about countries like Sri Lanka already adopting. There are not just Sri Lanka, many other countries who have adopted UPI. But for it to become an international standard like MasterCard or Visa, there are some challenges that we have to overcome. It could be regulatory in nature. It's not technology. It is not desirability. It is the viability part of it where you will have to crack to ensure that more and more countries adopt to it. For example, today's cross-border payments through SWIFT, we all know, maybe we'll not talk about it in public, but we all know SWIFT has been used as a weapon during wars, right? How do you overcome those challenges? UPI could be an answer to that. So these are various use cases that we can think of. It's like the moment of connecting a wheel to the luggage. It's for us in this room and outside to connect those dots, create those opportunities, and then those opportunities will explode.
Fantastic. I think this whole idea, like connecting wheels and the luggage, is interesting. Like wait, think about it. And our next speaker is Kushal Kumar. He is the ED and head of PFSI at Access Capital. So let me ask you that we are all like talking about UPI payments and how it makes everything so easy. But aren't the banks bleeding or losing money because of this? And how do I address this?
That's a very nice question. And we often think about what is the cost of every UPI transaction, and then it is said that all the banks are bearing that cost. And I can ask the audience for a poll as to every UPI transaction, what does it really cost? What is the marginal cost? Anyone, any guess? What is the marginal cost of every UPI transaction that you make at the current scale, which is $22 billion transactions a month? No. Every UPI transaction generally costs between 5 paisa to 6 paisa. And my friend here from MindGate can probably correct that. But that is the additional cost to the system, right? So 22 billion, you can do the maths. What is it costing the entire banking system? Okay, that cost right now is being borne by the banking system, the regulators, etc. Right? But if you look at what we have created something massively beautiful. As in, we have to appreciate that something which works at 5 paisa per transaction is truly humongous in the scale, right? Average transaction, let's say for UPI, even if you take it at, let's say 300 rupees, 6 paisa is nothing, right? A credit card transaction costs you, let's say about 2%. A debit card transaction costs you about 0.5% to 1.7%. Every other mode of transaction, including taking money out of the ATM, costs you a lot. the 10,000 rupees that you take out of the ATM costs you 15 rupees at least, 15 to 20 rupees, let's say broadly. That 20 rupees is borne by the system. So the system itself is becoming far more efficient because of UPI. We are creating something that is truly marvelous. And my sense is for the future, when we move to, let's say, agentic commerce, and my strict belief is that agentic commerce, whenever it happens, will keep picking the lowest cost mode of transaction. In that way, the UPI transactions will continue to pick even more. Okay, what it means for the entire system is that somebody will need to foot the bill. This infrastructure, this cost, somebody will need to foot the bill. My sense is probably the merchants in India will have to realize that, look, 5 paisa per transaction is worth taking the cost, worth taking the hit, rather than taking it through any other source. So monetization possibilities have already started coming in. Some of the merchants have already started paying for UPI transactions when it comes to merchant acquirers or banks who are charging. It's still a wonderfully efficient system. We are not realizing the true potential of what we have created in the form of DPI plus UPI. I think it's up for the system, and as we continue to become more and more efficient, profitability will also emerge from this ecosystem. Eventually, if you look at it and compare it to the closed system, let's say in China, where you have digital infrastructure, but that digital public infrastructure is actually controlled by private companies, the Alipays and the Tencents of the world. In India, you have a system which is truly public. The data right now, we are not utilizing it. We will probably get to a place where this data will also be publicly available for people to utilize for, let's say, credit, right? So UPI in future, in my view, will move into horizontal ways, which is credit, which is a use case you already know. It will move outside India. We have to take it outside India, right? Because the world needs a more efficient system of payment, right? So second leg will be it moving outside India. The third leg will be it moving to completely new use cases, which we haven't seen till date, which will come from the rise of agentic commerce, which will come from the rise of AI, which will come from the rise of, I would say, putting responsibility for commerce. As in, whenever agentic commerce happens, you will realize that, okay, somebody is transacting on your phone, but did you authorize it? Did you make that transaction? All those use cases will start emerging. So a lot of it has to come on UPI. I think it's just the beginning. We have created a marvelous system. The system will absorb the cost. I think for the country, it's a wonderful thing that we have created this. We shouldn't bother at all about the cost of UPI, at all.
Fantastic. I think great answer. Thanks to you, Kushagra. So we are at towards the end of the session, and I will be asking rapid fire questions to the panelists. So I will expect like brief answers, very brief. So I will start with Deepak. So is UPI an opportunity or a threat to banks?
It's a great opportunity, not just for bank, for everybody around us. Just to add one more line, I think this is the only payment instrument where every time you pay, the value of the currency does not depreciate as fast. So at 5 paisa, that means if same money goes 100 times over, the net value of the money in the system still remains reasonably high.
Fantastic. Ramanan, question is zero MDR, is it sustainable or a structural flaw?
So I think we got the answer just before. It is sustainable. The value is the cost is too low. There are other avenues to make the money. If I were to put it in perspective, banking is all about make money, move money, manage money. UPI is doing move money. Can it move to manage money and make money? I think that's the opportunity.
Harshavardhan Mastha, who was the customer, bank or fintech?
We are fintech.
Fintechs will own it, right?
We are fintech.
We are fintech. Okay. So, Lalit Chaudhary, uh, he- uh, uh, will the credit cards lose relevance in 5 years?
So credit cards will not lose their relevance. Only thing is RuPay will become more relevant. So yeah, so I think they Visa and Master really run for their money, and we are seeing it with all our customers. The RuPay penetration is expanding almost 35 to 40% annually. So I believe it's going to cannibalize other two cards, and credit is the way to go in India.
And for our speaker, Kushagra, uh, 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 is the UPI ecosystem overhyped or undervalued?
It's undervalued. I am totally of the belief that it's a great system. It can never be overhyped. Can never be overhyped. We have created something marvelous out here.
Abhishek ji, hard question. One risk in India's DPI stack nobody talks about.
Come again, please. Come again.
One risk in India's DPI stack nobody talks about.
Wow, I was thought of. Well, the risks keep on changing. It's a cat and mouse kind of a game. I spoke about how the changing landscape of AI, especially Mythos, how it's kind of shook us and forced us to really have a hard look at completely all our systems and how AI can actually game the whole thing. So if identities can be faked, I think practically then everything that gets built onto it can be compromised. I think to my mind, if there's a threat which is the adversarial use of AI, that might really be perhaps the biggest challenge and the threat. So we have to come together to really solve for it at the sectoral level, at the industry level, at the regulation level, every.
Fantastic. Any questions from the audience? One question. If not, we end it here. Yeah. Excellent session. Thank you, everyone. Thank you so much.